thank you for joining me for another Accounting Accelerator tutorial. In this tutorial, we're going to look in detail at what happens when interest is capitalized and how this affects the payment of both the loan capital and the interest. In other words, that payment, how much of it comes off the loan and how much comes off the interest. So for the purposes of this explanation, I've just got an example here. We've got a loan statement from Investor Bank as at the end of the year. They give us the balance on the 1st of March of the loan, 600,000. The interest capitalized is 48,000. And then we've got monthly repayments, including interest of 6,500 Rand a month. I want you to remember that when interest is capitalized, your monthly repayments will always include your interest. Then it says to us, note, the monthly capital repayments will increase by 10% over the next financial year. So what we are looking at there is obviously the current portion of the loan that's going to be paid. What we are required to do is to complete the equity and liability section of the Statement of Financial Position as at the end of the year relating to the loan from Investor Bank. So here we've got the equity and liabilities. Under non-current liabilities, we've got to show the long-term portion, and under current liabilities, we're going to show the current portion. So just as an aside, this current portion of loan could have been included under your trade and other payables note, or it can be shown separately as I've done it here on the face of the balance sheet. So to start, let's look at how much we've repaid off this loan. So it would be the 6,500 multiplied by 12 monthly installments, so that would be 78,000 Rand has come off our loan. Now we need to calculate what is the current portion that is going to be paid over the next financial year. And to do that, I'm going to show you by using a ledger account to help you understand this. This is our loan. So on the credit side, we're going to have the balance brought down of 600,000. The interest has been capitalized, so it gets added to your loan capital. And the interest we were told was 48,000. Then we've made 12 monthly repayments of 6,500 Rand each. So we would have 12 entries here, bank, bank, bank. We're just going to make one entry. And the total amount that was paid off the loan was 78,000 Rand. Let's complete this ledger account. So we're going to have a balance carried down of 570,000. And the balance brought down at the beginning of the next financial year will be 570,000. These totals 648,000, 648,000. Right. Now let's have a look and let's discuss how this works. We've got a payment here. Total amount paid was 78,000 Rand. Now the first thing that gets paid in full is the full amount of the interest. That amount gets paid in full. And then whatever is left over from your payment, the balance will come off your loan capital. But the important thing is that that interest gets paid in full first. So the amount that we're going to pay off our loan capital would be the 78,000 that we paid minus the full amount of the interest. So we paid 30,000 off our loan capital. And that is actually quite interesting, because if we have a look here, our capital was 600,000 at the beginning of the year. We've paid 30,000, so our balance is 570,000. So I want you to remember that in your loan, what is always left over is only ever the capital portion, because we remove the interest straight away through that payment. It's always only your capital. And the same applies to your statement of financial position. We only ever put in the capital amount of that loan. And I'm going to highlight that because that is important. So now we can answer our question. Our balance of the loan is 570,000. But we've got a current portion of the loan here, and we're told it's going to increase by 10% over the next financial year. We paid 30,000 in the current financial year. Therefore, in the next year, it's going to be 30,000 plus 10%. So that will be 33,000. This we're going to put into the current portion of the loan. Obviously, we must subtract it from the long-term portion. Therefore, the long-term portion of our loan is 537,000. All we've done is we have reclassified this 33,000 down into the current portion, because it's going to be paid within 12 months of the date of our financial statement. But if you add those two figures, you still come to the balance of your loan of 570,000 Rand. So I think by doing the ledger account, it helps you to understand how this payment gets split. Number one, interest gets settled first, balance comes off the capital portion of the loan.